Good morning, everyone. Monday, December 8th. Welcome back to the Clubhouse Insider. We are just 17 days away from Christmas, and it is officially Fed Week, one of the biggest rate weeks of the entire year. Experts are starting to change their tune and expect a rate cut to come. You can see here just the Google AI overview, widely expected to cut rates by 1/4 basis points this week on Wednesday the 10th. However, mortgage rates have been higher leading into Fed Week, which is especially expecting a cut is the exact opposite of the last couple cuts. So take the guessing off the table, take it totally out of it, stick to a plan when it comes to rates. If you're looking to refinance or purchase real estate. That is the best advice out there. If you try to guess, you will stress yourself out and you will be wrong more than 50% of the time. So even if the Fed keeps the policy the same, this week will bring major volatility. Markets react to things like tone, projections, even the press conference, literally anything and everything. They're going to look for inflation revisions, treasury auctions, end of the year trading. It's all going to contribute to really quick swings that could be possible in mortgage rates. So as we wind down 2025, buyers and homeowners should expect short-term ups and downs. But overall, the market is stabilizing. So if you take a look at the treasury, it's still hanging around this low fours level, but not so great. Right, we want to see a 3. We have seen a 3 recently, but here we are back up to a 4.1. That's what I'm talking about. Leading into the possible rate cut here, you're seeing it go up. So mortgage rates are mostly stable. You see them kind of leveling out here in the lower 6s. We're not seeing 6.5 really anymore as possibilities. We did for a bit in November, and then we're kind of just chugging along. But these are the kind of swings we're talking about. Day to day is really important. So if you're shopping for mortgage rates, it's important to know what day you're shopping on, and comparing a lender on one day and another lender on another day, you're not going to get your best results. So yes, they are overall stabilizing, but buyers can still negotiate strong deals. So if you can do so before competition returns, traditionally in that spring market, homeowners with higher interest rates should also keep an eye on 2026 because there could be some real refinance opportunities to come, especially if we can see some things leveling out. And we'll show you the rates here as well. So speaking of 2026 here, the reason we could see things level out, the reason we could see some things to look forward to is we're likely to get a new Fed chair, could get new Fed members, which really potentially a more rate-friendly voting structure. So if inflation keeps trending lower, recently we've seen gas prices come down lower. So if all these things kind of start moving along in the same direction instead of all this jumping up and down, we could finally step into a more normal rate environment with more inventory and more opportunities for buyers and investors. So lastly, this time of the year is perfect for planning, budgeting, organizing your goals. So with just a little bit of downtime, you can get ahead and make sure 2026 is your best year yet. So as always, stay tuned. I'll keep you updated every step of the way. This is the Clubhouse Insider for Monday, December 8th. Have a great week.